Hello and welcome to this week's episode of The Capitalist Investor. As always, you got me, Diamond Hands D. We got the whole crew together again. Tony the Tiger, Cool Hands Luke. What's going on, guys?
What up?
What's going on, man? Let's do this. What do we
got a lot going on,
we
so
do.
we're gonna get right to it. So, lots going on this week. We'll talk about Biden's new rule on the credit card industry, and that should be an interesting one. We'll talk about how inflation impacting the rich and what you need to do to be in the top 1%. We'll talk a little Bitcoin, obviously, because we got to. We got to. It's popping right now.
It's mooning.
It is definitely mooning. We'll talk a little iPhone, and we'll talk a little iPhone and
credit cards, and we're going to talk gold
as
Bitcoin.
well.
Yeah, we're hitting it. We're hitting all the bases. But we're doing it all in 5 minutes per segment. Let's get this moving.
Let's do it. So the banking industry not too happy with the Biden administration, basically putting in a new rule that late fees can't be any more than $8. I think I read that correctly?
Yeah.
It's $32 now is kind of the maximum.
Yeah.
Obviously, then interest and stuff on top of that, but just the fee for being late can't be more than $8. So, we talk about, the government, supposedly being just the referee when they're getting in there and they're changing the game. It's not the best thing.
It's not even their game. It's not their game. They're going and telling other companies what they need to be doing.
Right.
So this is what I found fascinating. So I remember back in the day when I first got my first credit card, and I got my introductory rate at 8%,
mm-hmm.
and I missed a payment because I was like 18, 19, 20 years old, just dumb, and missed the payment. And then what happens next is my 8% goes to like 30%. So here's what I found actually pretty fascinating is that they say by doing this, it's going to save the average person $220 per year for 45 million people who are late on paying their credit cards.
So you're incentivizing people to be late.
There are only 200 million working class people. You're telling me that roughly 20 to 25% can't make their credit card payments. That's what's mind-boggling to me.
Yeah.
Is that how that's how tight it is? Like,
I don't think I don't think boomers realize Gen X. I don't think Gen X realize the lifestyles millennials are living. And I don't think millennials realize the lifestyles Gen Z's living. And for sure, the multiple generations down definitely don't understand. So listen, my peers, like when it comes to credit cards, student loans, car loans, everything, like their whole paycheck already is maximized every single month or every single paycheck every 2 weeks without having any room for any kind of discretionary income. I mean, that's how most people between probably 21, 22 to probably 35 are living right now.
I mean, I'm, I don't know, 15 years older than you maybe. I lived that life too. Yeah. When I was out of college, I had some discretionary income, but I had my car, I had my apartment, and I had all my bills. and I get to go out a little bit. Yeah. I mean, maybe that was a luxury. Maybe like you're saying, like, hey, these people are eating ramen and hitting up the value meal. I don't know.
These people aren't. That's the difference. You guys were willing to eat ramen. Mm-hmm. My generation is not willing to eat ramen.
I thought they want to eat ramen.
No, they are not willing. So therefore, they will go into debt to go out to Wendy's every night or whatever it be.
Yep.
Okay. Here's the other crazy thing. So the only way on the capitalism side of this is credit card companies will fight back. And the way they're going to fight back is they're going to jack up interest rates or deny credit for people that need it.
Right.
Those are the two things that I see. They're going to get their money back.
Yeah.
And it's going to be, going from 25% interest to 32% interest.
So credit card companies want you to borrow money and not be able to essentially pay off the principal.
100%.
But there's a balance between what that amount is compared to when the credit card company gets scared that they will never get the money back, right? So like I think we're approaching that time frame when credit card companies are starting to realize, like, maybe actually we'll never get this money back because of the lifestyles people are living. So what I think you're actually going to see is credit limit decreases.
Really?
Yeah, for new account openings for younger people. I think the systematic, how we talk about like unemployment, systematic unemployment's rising because if jobs just aren't being created. It's the same thing with credit card companies. If you just systematically don't up your credit card limit, or if you don't keep the credit card limit where it's at, you can systematically decrease it for everybody, which decreases spending.
That would be new because they've never done that. Yeah. That would be fascinating if credit card interest went down. That would blow my mind.
Limits.
Oh, the limits.
Credit limits.
Mm-hmm. Come down.
So like if you have a $20,000 credit limit on your Discover card, Amex card, and you've now taken out $10,000, and now they're getting kind of concerned that maybe your income, what you're spending, maybe they can see the transactions in your account. They lower that from $20,000 down to $15,000 because they're concerned that you are getting over.
And I've seen that when I was, again, younger, 10, 15, 20 years ago, whatever. I paid off my credit card and they chopped my credit limit in half back in the day. Like, I mean, they've done that. Okay. Right. I thought you meant interest rates. I'm sorry. All right. Next one.
All right. So how much do you need to make to join the world's richest 1%? So basically that number is now 5.8 million in net worth. But more notably, that is up 12% from the prior year.
Yeah. So inflation is hitting the rich, and that's 12%, right? That means everything around them went up 12%, not this 3% BS they're feeding us, right? But think about this. So in 2022, to be in the top 1%, you needed 4.4 million. Last year, 5.1 million, and now it's 5.8 million. Like that's a heck of a incline.
Yes. The wealth disparity is getting bigger. I mean, that's just what it comes down to, is the wealth divide in America is getting bigger. I would say top 10% are getting way richer than the bottom 90%, right? It's just the bottom 90% are still spending on credit cards like we were just talking about. Top 10% are making more money, have more asset values because their home is appreciated, their stock accounts have gone up. Maybe on paper, maybe they actually aren't worth this much more, but they actually on paper are, right? Mm-hmm. That's the difference. My father we were having cigars real quick. My father and I were having cigars like this past weekend when he was up here. And one of the things he said to me is like, I just don't understand how so many people have so much money. Like, and my dad's one of those guys that saved money his entire life. We were very middle class growing up, southeast small town Ohio. He did a really good job saving money, and he's I would say he's probably our average client, what our average client is here, right? And he just said to me, like, I could go buy a house like when I retire in Florida, but like I would be stretched. And like I just don't understand how people just continue just to buy these like retirement homes, second houses. And it's it really, I think, really gets when you think about it, like how do so many people have so much money compared to the average person?
Yeah, it's wild because even just I'm only, well, I shouldn't say only, but I'm 43 years old. So, I grew up in late 80s, early 90s, and it seemed like a lot of people, I grew up with were in kind of the same like financial situation, like, towards the end, in high school days, like, middle class had a little bit of disposable income, but everyone seemed to be very, equal, and everyone seemed to value money similarly. And now it seems to be just like, what can I buy?
Bigger, better,
exactly.
More expensive. Like I same thing, man. I grew up in, middle class, very, very lower middle class, if that. My mom worked for a bank, and like the houses and the costs. I mean, I know there's inflation and everything, but I don't remember people buying new houses every 3 years, and and house appreciation back in the 80s and the early 90s. Like, no, I don't. It was not like this.
No, right? I think everyone's doom spending. Every generation is doom spending.
Here's a hypothesis. Here's a hypothesis, a vision, or just a stupid comment. I don't know what's coming. Do you think that the generation before the boomers were such good spenders that some of the boomers and even Gen X look at the balance sheet when they inherit and they're banking on that money to go and do what they want to do now and say, hey, that money will be coming in this direction and, the next 3 to 15 years or something. I don't know. I'm just asking.
What I think is lack of foundational values that America has in today's world. The spirituality of younger generations is not there. Whether you believe in Christian, Buddhism, like Hindu, it doesn't matter. Like the religious aspect of that plays a factor into what you do on a daily basis. And when you don't have any kind of foundation to live by, you live in excess, in a lot of excess.
Mm-hmm.
And I think that is truly contributing to not enjoying the moment. No one's having kids, no one's getting married, so they are just living this selfish lifestyle of spending on themselves to think that they think will make them happy, but in the end, that doesn't truly make them happy.
Right.
That's what I think.
Mm-hmm.
Yeah. But another comment with the rich getting richer, like $150,000, like making $100,000 when I graduated college was like, man, you were making it. Like, and I got to work to get there. Now it's like everyone. No, I'm not gonna say everyone makes $100,000, but like you make $100,000 and it's not enough. And then they were saying $150,000 in some cities. Like I will just say like the higher cost of living cities. I'll just say California, cities like that. Oregon, $150,000. I can only imagine. I mean, somebody's paying $2,000, $2,500 for a rent. Like that's a mortgage payment. That's a expensive mortgage payment in Cleveland.
Mm-hmm. What we see with what we do here from a financial planning perspective, like the more money you make, the more you end up spending anyway. So you just upgrade your lifestyle, bigger house, better car, so you end up actually becoming somewhat financially free if you reach those income levels, but you just upgrade your life and you actually
that's what you do. You spend what you make. That's why it's hard for anyone to save because they're like, oh, I'm making more money. I'm going to go get that car I've been wanting.
Which is fine and dandy when the economy's rolling, but when something breaks, then it all comes falling down. And that's what that's what I've always been concerned about.
Yeah. All right. So moving on to Apple. Apple's getting its clock cleaned in China. Yeah, because they can't. They're losing ground in selling iPhones.
Yep.
Is that more in China and not really the U.S., or are they losing ground in the U.S. too? I
think
not
it's losing ground like market share.
No,
in the U.S. or anything like that.
Yeah.
Their just profits are getting squeezed a little bit because of inflationary wholesale prices and geopolitical tensions, right? So, the concern is, I mean, China. Let's go broader here. China's debt to GDP is 250% or something like that. I think Japan's is 290%. So basically these economies over in Asia, even some in Europe, got built up through debt, right? So they basically pulled forward more than we did all this growth, which has stimulated the economy, created all these companies to compete with the United States. Now it's are these companies' technology actually going to be able to compete with the U.S. to continue to take market share? Because if not, China's in a really bad situation. So
maybe it's a form. Maybe China's winning because maybe it's a form of people spending less money. They need to hey, this phone, my iPhone versus cell phone X. There's no difference. They do the same thing, but it's $300 less, and the service is $20 less a month. I don't know. It could be just a combination of that, but at the end of the day, Apple's not innovating. I've said this before. They're not really doing it. I mean, great, we got some goggles now that I haven't seen or know anyone that has bought them. They're $4,000, right? But they have not done anything. When they get AI onto the phone, which they're working on, which could take a few years to do, so it doesn't burn through the battery because it's so energy intensive for AI, right? Until they innovate something I'm surprised they haven't lost a lot of ground thus far. Because I see the commercials for Google phone and stuff, and it looks like they can do some cool stuff on it. I don't know.
I think that's exactly what's happening. I think the competition is finally catching up to Apple, and I think the advantages to having the iPhone over a different brand and the price you have to pay to get there, that is shrinking by every new iPhone release, right? I'm a perfect example. I used to get every single iPhone every single year. I think I stopped that around the 10. So we're on 15. So I'm using it now until the battery stops working.
I still have a 10.
Oh,
These things are relic.
What's the there's a theory, or there's a certain limit to where technology can get to with the how small it can get with the chips they have and the processing power with the current materials that we have, like silicon, right? I think we're kind of close to approaching that kind of limit, right? Which is why technology is getting so fast and efficient that you don't need to upgrade, like you said. So
right.
If these companies can't, that's another concern with technology, is like, what else can we do without really discovering the wheel again from technological side of things?
The only thing I would say Apple's advantage is that they're tied into everything. Like if you've had an Apple phone, man, it's a little difficult to unwind it.
Yeah.
From like everything else you have, because it's probably an Apple product too, and your droids and stuff like that will not mesh well.
It's called Moore's Law. That's the term I was referring to. Moore's Law says that the number of transistors in an integrated circuit doubles about every 2 years, but eventually that's going to be tapering off. So.
Yeah.
Yep, and you see that. So that was they talked about that with computers, right? And that's 10 years ago, you had to upgrade your computer because you needed the extra power to handle what was, whatever applications you were trying to run. That's no longer the case. If it physically lasts, you could still use a 10-year-old computer right now.
Right.
So yeah, definitely an issue for hardware. That's why Apple's been doing so well, because they've been able to get past that with their subscriptions and their ecosystem that locks people in.
I like that word, ecosystem.
Yeah, but that's that's going away. I think the life cycles of companies, eventually you get replaced, no matter how big and bad you are. I'm sure Amazon will be there eventually one day. Probably not anytime soon, but it'll happen, and someone will innovate, and Amazon. I won't be ordering everything that I purchase basically through Amazon anymore. All right.
It's a sad day.
Yeah,
that's right.
All right. Bitcoin. Yeah. It's mooning. It's going up. It is. It's going up pretty nice, right? What is it up? 50% year to date?
If maybe more.
Maybe more.
I think a little bit more than that. So what, it touched 69,000 a coin, and now it's around 65, 66, something like that.
Yep.
The ETF came out, more available to be invested in it, so that it's got to be helping.
Every institution is going to buy like a 1% sliver.
Yeah.
Right?
Yeah. The April halving of Bitcoin, the mining, will become more difficult.
Yep.
Therefore, the scarcity will be even higher, and that's coming up in April. So, but the one thing that I read this one analyst, and he's actually worried about the retail investor investing in Bitcoin, because they will, more is better. So they'll go and buy a levered 3x or 2x Bitcoin ETF. So when the ETF goes up 5% in a day, that thing's up 10.
Yep.
But when it's down 7, you're down 14.
Yep.
Like the swings are immense, and they're worried about the profit taking, the scared money. Like, oh my God, I lost 40. I got to bail, right?
Mm-hmm.
And pull the ripcord. So I don't know. I think there's a lot of momentum behind it right now.
I have a couple thoughts. Just because I know what I'm doing, my family, my father bought it at $18,500. That's what the limit price we put on to buy it back when it dropped. So we timed close to the low. Now we're up almost 4x money on that, and when that happens, now it's a larger portion of his portfolio. So I have a price target in mind, about $80,000 is where I think it's going to go. Maybe start to really stagnate a little bit after this momentum fades a little bit. So we're looking to trim a little bit at $80,000. But I think I think the philosophy should be everyone should own 1% for the long term, because it's either going, in my opinion, $1 million or zero. Like it's one or the other. In the end, it's going to 1 million or zero. So you want to always have a small sliver, but as it goes up and as it's becoming more of a higher allocation in your portfolio, you're going to want to start to trim a little bit, especially when it 4x's from a price point. Maybe.
Do you think it's better to actually own a Bitcoin? Like, so you can go on Coinbase and put $5,000, buy some Bitcoin, you own 0.2% of a coin or something like that.
Mm-hmm.
Like, is that what you thoughts on that?
I will give you my absolutely direct thoughts on that. My dad and my father, who has the majority of our Bitcoin, he's holding it on a flash drive. And he transferred it from Coinbase to the flash drive. And I told him, until we're going to go ahead and sell that, don't put it on the exchange. Because if you remember, Coinbase went under a couple weeks ago. There were theories about hacking, things like that. It's not your money when it's on the exchange. It's not your Bitcoin. So if anything ever happened to where there ever becomes a crack in the financial system and whatever they do, you still can own the Bitcoin on your flash drive. So until the day comes that we're selling it, that day, we're not transferring it back to the exchange.
Yeah, I actually had that conversation with one of my clients. I think he said he had 3 or 4 coins.
Yeah.
And I'm like, all right, well, not prying, but like, where is it? Right. Well, it's on the exchange. I'm like, you need to go buy a ledger, right? You know, the flash drive you're talking about. You go get a ledger.
Exactly what it's called.
And you buy it, and then you put it in a fireproof safe in your house, and I would even put it in a fireproof envelope inside the fireproof safe, right? Like, because I have a ledger for some of my minimal
higher price JPEGs,
my NFTs, but also some of my small amount of Bitcoin. I just threw it on there. Why not? But that is the safest thing you can do and the smartest thing. But you can't put you can't invest in the ETF and then put the ETF on a ledger. Right. It's got to be through the exchange, like Coinbase. Right. Are their fees still high, like on Coinbase? It's still
they're
like
extremely high. So
what is it, like 3%?
No, it's like 1%. So there's okay. I don't want to get too far deep into it. There's one called a maker fee and taker fee. If you basically buy at market, it's a taker fee. Those are higher. If you like have limit sells or buys, those are maker fees.
Okay.
So essentially, it's 1% the first $1,000. Then it's like 0.6% the next 10,000. Then 0.3% the next 50,000. So just quick tip out there: if you have a lot in Bitcoin, you want to sell it like on exchange like that. You want to sell like $1,000 and then wait an hour, sell another $10,000 and wait an hour, because then your fees will go down systematically from that. That's what we're going to do when we're. But
I also, they also put Ethereum up next to Bitcoin when they show it on the ticker on TV and stuff, and they typically move in lockstep. But I'm actually noticing, I feel like Ethereum is going up more than Bitcoin. I don't know exactly why. I mean, I have my theories. I think it's just an alternative Bitcoin, and it needs to catch up.
That's right.
That would be my only immediate guess. Because
just smaller market cap.
Yeah, I mean, all the small coins are going. All the small coins are going up too. People are buying NFTs again. I saw someone pay like $16 million for one. Like, I don't even remember
for one of the rocks. The picture of a rock.
Yeah.
All right.
No, it's like the real, like, one of the first NFTs out there. The famous ones are like really plain looking.
Yeah, I know which one you're talking about. Yeah,
but they were like the big money before. But yeah, someone just bought that. I see like the NBA TopShot transactions come through my Twitter all the time now. Yeah, someone just spent like $23,000 on LeBron.
Are you guys going to buy your Donald Trump NFTs? Because they're there.
What about the shoes? Donald Trump shoes.
They did have those. Yeah. What was it? Only one pair of shoes?
I think it was 300 or something.
300 pairs. Okay. All right. Go ahead.
The one pair in question, he signed those one.
Okay. Because I saw that. Somebody paid like $15,000 for him or something.
Yeah, I think it was like 9.
Yeah. All right. One last topic: gold.
Goes hand in hand with Bitcoin.
Does it?
I think so.
Why?
So I'll give you my quick take. I think Bitcoin, everyone says it's rising because the stock market's rising. It's more speculative and it's going up like that. It's part of the reason. I truly think that all the things we talked about earlier about credit card debt, things like that, systematically problems, government debt, we talk about all the time. I think Bitcoin's mainly rising because people are concerned that like the system is kind of the Bitcoin's not exactly what it was supposed to do as a hedge against the system. It was created after 2009. When financial easing happened, rates became 0%. The Fed's balance sheet was $1 trillion. Now we're like $8.5 trillion Fed balance sheet, right? So it was created basically as a hedge against a failing monetary system. And I'm not saying we're there where it's failed yet, but I think it's actually going up because of that.
Gold, historic.
Gold does the same thing.
Yeah, I mean, I know you said Bitcoin, and it's just so new. And again, let's just say the power goes off. power grids are crushed. You can't use your Bitcoin. But I can have a gold bar in my basement and go get a knife and shave off some things and trade it for some pigs.
Is that how it works to get a knife?
Yeah, I don't know. I mean, like, yes, it does, Luke. I'm gonna go get a knife and I'm gonna shave off a shilling. But I am dead serious though. Like something tangible where it's just hard to trade Bitcoin. Like if I wanted to buy a car in Bitcoin, I mean, I know I could, but man, what a I don't know what to say. It's just like a hard transaction.
Yeah.
Right.
Well, actually, just 'cause my family situation, the Bitcoin we're thinking about selling at around 80 is what we're kind of looking at. We're thinking about buying physical gold with it. So kind of like that's where my take is. That it goes kind of hand in hand.
So then here's just a way off in left field because I'm thinking about that. Like think about the 4x gain that your parents had.
Yeah.
You know, how does the IRS know about that? Like how does that come into play? Like because
Coinbase reports IRS above a certain amount.
Do they?
Yeah, they're legally obligated.
That's stupid.
I mean, I know. When I sold because I had a 7xer on Bitcoin.
Yeah,
that's what ended up how I was able to buy my house and do the down payment, things like that. I sold mine at 40. I kind of regret it now since it's back up to whatever it be. But Coinbase sent me like a form, and that was like 4 years ago. But gold. What do you guys think about gold going up to all-time highs?
So it's up like 16% in the last 12 months. But if you look back when gold hit its record at that time in 1980, it was worth $850 an ounce, which would equate to $3,200 in today's dollars. So is it real? It's an all-time high, but on an inflation basis, it's not.
Yeah, that's always the thing. Everyone always says that gold is an inflation hedge, but if you look at it over a longer period of time, like you did,
case in point,
it is not.
Right. It's ultimately calamity hedge. It's a commodity. Can it be and should it be part of your portfolio? I think of a well-balanced portfolio it can. If you're trying to hit home runs every day, like you ain't touching gold because it's too boring.
Yeah. What's interesting is diamonds are trying to do the same thing with diamonds right now. It's like commoditized diamonds. Diamond Standard's the name of the company that they have like coins where you have like 10 diamonds within the coin, and they all like I know diamonds are weird because you have like clarity, you have like all these different metrics and stuff, but apparently every coin's supposed to be worth the same. So like the next commodity that's coming up is diamonds. Apparently they're trying to commoditize, create ETFs for and things like that. That's gonna be interesting to see. But diamonds I don't think are the same as gold historically. We thought of the same at least.
No. But again, it could be and should be part of the portfolio because I call it calamity hedge, whether that's geopolitical issues, monetary issues, wars, stuff like that. It usually goes up.
So it makes no sense, right? So markets at all-time highs, and so is gold.
Yeah.
So who's right?
Yep, exactly.
And houses are at all-time highs. Bonds have rallied since the beginning of this year. I mean, the end of last year. Like, every asset class is essentially up. Mm-hmm. And it's like, who's right? Who's wrong? What's really going on?
Yeah. And the end of the day, like, every country practically is in a recession except the United States. Why? Because we printed $6 trillion to support what we're doing right now.
Yep.
That's the scary part. Like I think like China was trying to print like 500 billion, and I'm like, that's it. Man, we spend that in 3 days here in the United States. On
it's a trillion. Yeah, it's like
50 days. Yeah.
Yeah, trillion every 100 days.
Yep,
I think.
Mm-hmm. Yeah, I just saw that.
Yeah. Exciting times, guys.
Yeah, it's
All
wild.
right.
It's
Take
wild.
us home. Take us home, D.
All right. Well, thanks everyone for listening this week. If you got any questions, comments, ideas for the show, hit us up at info@swpconnect.com, and we will talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.